And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alix Steel, taking you to the closing bell, a global simulcast. It starts right now, joined in the television studio by Scarlet Fu, Tim Stenovec in the radio booth alongside Emily Graffeo. Carol Masser has the day off. We welcome our audiences across all of our Bloomberg platforms here on a big Friday Jobs Eve.
Yeah, I think that's a good way to describe it. That's the big thing that matters. We just spoke to Jason Britton.
I don't know. I was working on that too.
I didn't get a lot of sleep last night. I was in Korea all night.
The suspense is there. The suspense is there. Don't worry. Mike McKee told us this is the most important payrolls report.
Oh gosh.
Since the last payrolls report.
It's going to be a snoozer. That means we're going to see...
It's not going to be how can it be a snoozer?
Nothing in bond yields. Okay, well, here. The number is 165K jobs added. So if it comes in line, then, I mean, we typically wouldn't see the market move. So we'll
But you know what? We'll just lurch forward and hyper-fixate on the next big data point,
yes,
which will be CPI next week, right?
That's what we do.
Yeah, well, there's always something to anticipate.
Well, and then to that point, 22V Research polled in a survey said that 44% of investors think the reaction to Friday's job will be risk on, but you have 27% risk off and 29% mixed. I don't know what that means. That's
a big shrug.
Yeah.
Yeah, and when you talk about the actual data itself, I mean, we're talking about economist estimates that are right around that 165,000 level, and I kind of wonder what actually constitutes really a beat or miss. I mean, when you look at it on a 3-month rolling basis, we're pretty much in line with historical averages and pretty much in line with what a lot of economists said they're comfortable with. So it'll be an interesting day tomorrow. That comes out 8:30 a.m. tomorrow out of Washington. Meanwhile, at 4 p.m. here in New York, you get the closing bells with the Dow Jones Industrial Average and the S&P looking like they're going to close out the day in the red. The Dow down about 0.5%, roughly 200 points. The S&P down 0.3%, roughly 17 points. The Nasdaq Composite, though, inching out a gain on the day, roughly about 0.25%. Meanwhile, the Russell 2000, S&P 400 mid-caps, and Dow Transports all significantly lower on the day. We
did see more stocks in the S&P 500 move lower than stocks move higher. 373 decliners in the S&P 500, 126 stocks did move higher in the S&P 500, Scarlett.
All right, no one wants to get out too far ahead of the big jobs report. Let's take a look at the IMAP, which shows which sectors are in the green, which sectors are lagging behind. Let's start with the advancers. Consumer discretionary, and that's really on Tesla and Amazon, gaining 1.4% on the day. Communication services up 0.5%, and tech is basically unchanged at this point. You do see pockets of green there within the tech sector. Well, in terms of decliners, healthcare and industrials and in financials, each losing at least 1% on the day.
All right. Well, you mentioned my first gainer there, Scarlett. A nice little preview for what did move higher, starting with shares of Tesla up close to 5%, 4.9%, the highest intraday going all the way back to July. It did say that it plans to launch its full self-driving tech in China and Europe in the first quarter of next year. Separately, Adam Jonas over at Morgan Stanley had a note out that highlighted Tesla's underperformance versus other tech megacaps and suggested keeping near-term expectations regarding the firm's robotaxi, quote, well managed. Remember that robotaxi is set to be unveiled at an event next month. It was supposed to be unveiled back in August, but October 10th is the date that they're targeting now. Let's go to the skies for the next stock that moved higher, JetBlue Airways. The shares jumped after the company boosted its revenue forecast for the third quarter. Look at that, higher by more than 7% today. JetBlue said it actually benefited from rebooking passengers from rival airlines whose flights were disrupted by that tech outage in July. Remember, it was that software update from CrowdStrike that upended multiple industries. Over a few days in July, it forced airlines to cancel thousands of flights. Delta was affected the worst. Some carriers, though, largely sidestepped the problems due to their use of other systems. And finally, one of the most actively traded stocks today was Applied Digital. They do data centers. APLD is the ticker. Shares surged more than 65%. The company entered into definitive agreements for a $160 million private placement financing period from a group of institutional and accredited investors, including NVIDIA. Still down a little more than 20% so far this year, though, Emily.
All right, well, I'm looking at the decliners. First, watching Old Dominion Freight Line, those shares sliding as much as 7.2%, but paring back some of the loss to finish the day around 5%. This is after the company said that less than truckload tons per day, that is the metric that these trucking companies use, it fell in August or it fell 6.1% from the prior year period. A lot of trading in the put options. Those are bearish options. We saw that volume more than triple the average today, so more investors piling in on the bearish options bet for that trucking company. I'm also looking at Frontier because that stock, if you guys remember, surged 37% yesterday after the news that Verizon was in talks to buy that communications company. Today, paring back that gain. So now the share is falling about 9%, but still up higher after that news. And this came after we saw today, Verizon said Frontier's investors will get $38.50 a share, a 37% premium to the closing price on Tuesday. Finally, I'm looking at ChargePoint Holdings. This is an EV charging solutions company. Those shares down as much as 23% on Thursday, paring back some of that loss, but not much. This was the most intraday drop since November after the company's revenue forecast for the third quarter missed estimates, and the firm announced that it plans to cut 15% of its workforce. Some analysts downgraded the stock, citing an unclear path to revenue growth and an EV recession.
Ooh. Well, that's not very good. I mean, if you don't have the charging stations, then how do you buy an EV? And that can be stressful if you are a car buyer. All right, I'm looking at the bond market here. Yep, the bond bull continues to reign, particularly in the back end. You have the 2-year flat, and you have the 10-year just down by about 2-3 basis points here. Basically a parity for the 2 10s. But the volatility is definitely picking up within the bond market, all set up for Jobs Friday.